Yeah. Yeah, let's start back with regards to it. So, what did we speak about? All the expenses related to a particular year has to be matched to find out that particular revenue onto it. Now, let's come with regards to your carry forward of future related expenses. What did I say? Any expenses which are not related to the current year, you will forward it to the next year. So that since I can take the benefit in the future, since I can take what? Benefit in the future, that will be treated as my asset. Clear with this? The same thing. I have paid a rent for 18 months. My accounting period is what? 12 months. 12 months will be treated as expense. The remaining 6 months, since I can take the benefit in the future, that will be treated as a asset. Are you guys clear with this? Clear with this? Now let's go next one. If I am getting an income in advance, if I am getting what? You are not getting the benefit in the current year. You will be getting the benefit in the future. So, therefore, that will be treated as a liability. Because let's assume if that benefit does not arise, you might have to give back the money. Are you clear? Somebody gave you some salary in advance. For me, let's assume they gave me a salary in advance. I did not earn yet. So, till the time I earn for it, it will become a liability on the business. So, any income paid in advance becomes a liability. Now, there are certain exceptions that we need to look into it, which is gonna overrule the matching concept. That is your I call this as abnormal losses. Now, let's assume that you guys have given me money. You have given me money. Now, on 31st March, I was really wealthy. 5th April, I became bankrupt. 5th April, you became, sorry, I became bankrupt. You guys are rich. So I became bankrupt. Right? Now, do you think you will get back the money that you have given it to me? But on 31st March, were you sure you will get the money back? On 5th April? Now, in certain cases like this, what happens when you become aware of a certain incident, even though this has happened in the next accounting year or other part of it, if it is going to impact the current year business, like the last year's financial statements, it is okay to record it. For an example, goods caught by fire. Now, when will insurance company come? All of those are fine. Did it happen in this year? Or it is supposed to be you have got an insurance money last year to the current year. Last year fire happened, insurance company, it will take their own sweet time to pay. So when they pay, you record it. So these are not going to be trying to match, your matching concept. Certain times, only abnormal items are given an exception. We have an accounting standard pure dealing with this, not too important for us in the foundation. Foundation, we have one or two items that we can cover it up. Are you guys clear? Clear with this? Now, let's come to trading account. The format of trading account is we start off on remember my trading or profit and loss account. The format is on my, this is gonna follow a format of ledger account. Trading and P&L account will follow the format of what? How does the ledger account work? Debit amount, right? That is particulars amount, particulars amount. This is my debit side, this is my credit side. Are you clear? Only thing is I won't write the dates. What I don't write? Clear? Because this is a summary of the ledger account, so it's not happened on a particular date. So the format of trading account is particulars amount, particulars amount. On the first side will be all my expenses. The second side that's going to be on the credit side will be all my income. Are you clear? Now there are lots of concepts that you need to understand. Trading account is little confusing, but P&L account is easy. Now let's try to understand the trading account. How does it work? See here, I have my income on my credit side that I call it as sales. What did I tell you trading account is? Trading account, I try to match my direct income with my direct expense. Now, let's try to understand this sales. What will be the direct for a trading company? If I have told you this is the sales I have incurred, how do you find out what is the cost incurred on it? Think about a shop. Shop is a trading company. Now, let's assume you sold today some 50 packets of biscuit. What is the cost for you there? Cost of purchasing 50 biscuits. Today you sold 50 biscuits. What is the cost of it? Whatever cost I have incurred for 50 biscuits. If I have purchased 70 biscuits on that day, will you take the cost of 50 or 70? I have sold 50 biscuits. I have purchased 70 biscuits. What is the cost that you will take? Cost of 50 biscuits or 70 biscuits? Why, ma? I'll take the cost. See, if I've sold 50 biscuits, I should consider the cost of 50 biscuits. Now, let's assume I have purchased 70 biscuits. Is this fair? No, right? So that means I need to remove this 20 from the purchase cost. This 20, which is unsold, becomes my closing stock. Understood? Now, assume that you had 10 stock available in the beginning of the year. 10 stock available at the beginning of the year. I still have to get the value only of how many goods? Now, see here, I had 10 opening stock. I had purchased 70. Totally, I have 80. In this 80, I sold what? So, I am left with what? Why am I removing that 30? Is because of the matching concept. Why am I removing the 30? Is because of what? Are you clear? So now there are ways to write this. First thing, let's try to understand COGS. We'll try to understand what? What is COGS? Cost of goods sold. How do you find cost of goods sold? Is basically, see here, my opening stock plus purchases minus closing stock. Write this down. Opening stock plus purchases minus the closing stock. Are you guys clear? Online folks? The ones who are online, just ping it across so that I know whether it's going fine or not. Done. Now the same thing I'm going to be converting it in the trading account format. The same thing I will write it in which format? Now look into it. Sales. On the other side, opening stock, purchases minus closing stock. This I can write it here. This I can write it here. Reducing can be written on the other side. We know it, right? So I can write it this way. For this, I will add my direct expense. So let's give some values. Let's assume 100, 5,000, 2,000, 12,000, 2,000. So I'll end up getting my, that is 14,000. Here it is what? 7,100. This will be called as my gross profit. So COGS is basically nothing, boss. For selling the goods, how much did you actually incur? Direct expenses is called COGS. Did you all understand this? Right? Now I want you guys to just go a little bit more in depth of the concept. See here on the credit side, sales minus sales returns. What is this? I am trying to find what is my net income that I have earned. What is my net income that I have earned? First thing. Why am I writing closing stock? Why am I writing closing stock? Because I told you I have to find my net sold value. On the debit side, opening stock, purchases. Again, look into it. Purchase minus purchase returns. Then carriage inwards. What is carriage inwards? Transportation cost incurred for bringing the goods from the supplier to the place of business. Right? Wages. I'm talking of direct wages. That is any cost that I'm incurring for maybe for raw materials, for packing. Lot of guys when they're in the trading thing, if let's assume somebody is working there or other part of it, something which is directly related to the goods becomes part of my direct wage. Fuel, power, gas, if any. Manufacturing expense, if any. Because I'm talking of trading company, this will not appear. But if there are anything that is required for smaller manufacturing required for trading, that will be taken. And the balancing figure will become your gross profit. Are you guys clear? Copy this down first. Guys, are you clear till here? Now, as you keep writing, listen to certain concepts. Closing stock. Closing stock will not appear in the trial balance. Closing stock will not appear in the trial balance. If it is appearing in the trial balance, if it is appearing in the trial, what does that mean? Hey, it should only appear once in my financial statements. If closing stock is appearing in the trial balance, it should only appear once in the, that means closing stock will appear only in balance sheet then. Closing stock will appear only in the, why not in the P&L account is the question. Do you remember we told something called as adjusted purchases? So the purchase value, what will reflect in the trading account, will already be reduced the closing stock there only. When the closing stock is already appearing in the trial balance, what does it mean? That your purchase value is only showing the purchase related to the sale made. There is no closing stock required anymore. So write this down. If closing stock is already appearing in the trial balance, if the closing stock is already appearing in the trial balance, that means the purchases are only related to the goods sold, in the bracket adjusted purchases, therefore therefore it will appear only in the therefore it will appear only in the therefore it will appear only in the balance sheet asset side. Second part of it, if the closing stock is not appearing, in the trial balance, yeah, Imanshi, if the closing stock is not appearing in the trial balance, what did I say? If something is not appearing in the trial balance, it should appear twice, right? If the closing stock is not appearing in the trial balance, it should appear twice in financial statements. It should appear twice in the financial statements. First, in the trading account, credit side. In trading account, credit side. Second, in the balance sheet, asset side, debit. What I've written now, I want you guys, for any adjustments in your future also, whoever is coming for your intermediate, final or other part of it, please make sure whenever an adjustment comes, try to understand where is it getting affected in your P&L and balance sheet. When any adjustment comes, you need to understand, boss, is it gonna affect my trading account or balance sheet? How it is affecting your debit and credit? You need, if you can analyze this right, you will become one of the best accounting guys in the world. I'm not just trying to boast or other things. This is the only thing that you have to understand it well. You are fine till final. You don't have to worry about your accounting at all if you can understand this. Any transaction comes, hey, okay, I know this will affect in my trading. This will appear in my balance sheet. Oh, this will come in the liability. This will come in my income. So you need to start relate to it. You will have a lot of growth in your articleship days when you are doing your finalization and other part of it. Because your boss or your super seniors, when they say, this is what they do out there. And if you get your foundation right, that time it becomes very easier. Are you clear with this? Everyone clear? Online folks, offline folks, YouTube people? Are you guys clear? Can we go next? I want you guys to take this question, take out your calculator. Trial balance of the financial year ended of Deepakshi shows the following. Purchase, sales, debtors, creditors, opening stock, closing stock, other expenses, income, fixed assets, capital. Creditors balance as on is 3 lakhs. You are required to find out the COGS. You are required to find out the COGS. How do you find your COGS? Tell me the answer. Everyone post your answers in the comments. How much did you get? 9 lakh? Arvind bhai. Kitna bhai? Uy. ಕಾಣ್ತಲ್ವ ಇಷ್ಟು ಹೋಗ್ ಕನ್ನಡ ಹಾಕೊಳ್ಳಲಿ ಇಷ್ಟು ಎಲ್ಲ ಇದು ಇಷ್ಟು ದೊಡ್ಡದಾಯ್ತು ಹೋಗ್ ಪವರ್ ಚೆಕ್ ಮಾಡ್ಸು ತಮಾಷೆಗೆ ಹೇಳ್ತಲ್ಲ ಹಾ ಮತ್ತೆ ಇಲ್ಲ ಸರ್ ನಾನು ಕಾಣಲ್ಲ ಅಂತ ಹೇಳ್ಬಿಟ್ರೆ ಅಂತ ಕೇಸ್ಗೆ ಸಾಕ್ಬಿಡ್ಬೇಡ ಮತ್ತೆ hey you can't tell this race. I'm telling you something. You tell lightly, they'll go show some fan and all, they'll say I'll do this and all. Danger this teaching. Guys, what's the answer? COGS.
0. Purchases 1 lakh.
Hey, no, this 10 lakh only. This 10 lakh only. Sorry. How much? 9 lakh, no? Everyone, if you can pinch yourself hard, boss, you're wrong. You know when I give easy, you'll do mistakes. Huh?
Whatever we expect, no, it is opposite.
Madam, it's not that. It is because you're not applying. It's because you're not applying. Listen to it. Wait. What did I tell you? No, madam. First rule. Where is closing stock appearing? In trial balance. When I said closing stock is appearing in the trial balance, what did I say? Your purchases, what is showing is already the purchases which is related to your goods sold, is related to your goods sold, right? If you ask me what is your total purchase value, I want you guys to understand this. Purchase, they're telling you 10 lakh, right? Plus closing stock 3 lakh. This is the total value of purchases, which is 13 lakh. What 10 lakhs they've given is my adjusted purchases. Are you guys clear with this? Some problem happening again and again. I'm getting irritated. Are you guys clear with this? That's right. 2 minutes back, I made you write also. Forget telling. I gave you with proof. Guys, again I'm telling you, listen. When the closing stock is appearing in the trial balance, the purchases shown in the trial balance is called as adjusted. What do you mean by adjusted purchases? Is total purchases minus closing stock. Total purchases minus. Are you clear? Now, in the given question, what is the adjusted purchases appearing in the trial balance? 10 lakhs. Do you know the total purchases? No. Do you know the closing stock? Therefore, X is equal to 13 lakhs. 1 minute back making right also. You guys do mistakes. Older. He'll tell I could not see. That's why I got right wrong. Otherwise, correct, no. See, yes, it seems. That was not his problem. It was his vision problem. Write it down. If closing, do you have to write again? Or just copy this? Since purchases is appearing in the trial balance already, since purchases is appearing in the trial balances already, since closing stock is appearing in trial balance already, the purchases reflect adjusted purchases. The purchases reflect adjusted purchases. That is adjusted purchases is equal to total purchases minus closing stock. Total purchases minus closing stock. That is what is the question? Purchases is adjusted purchases 10 lakhs is equal to 10 lakh is equal to X minus 3 lakhs. Therefore, X is equal to 13 lakhs. Okay, now we'll try to understand this concept here. What is the formula for COGS? Opening stock plus purchases minus closing stock. What is the opening stock? Opening stock is, what is the purchase value that we found out? 13 lakh minus closing stock. Therefore, what's the answer? One sec, listen to it. What is this minus this? This is adjusted purchases. So, in the question, when closing stock is already appearing, your COGS can be just the opening stock plus purchases. Understood the application? Theory application. Now you won't do that mistake again. That's why I'm saying don't get into the excitement of solving. That too when I give you an easy question. Difficult question, you'll get it easy. Easy questions is where we'll do mistakes. Done? Copy this down. Nice question, no? Nice. Preeti, Sendil, are you guys clear with this concept? Bani, Are you guys clear with this? Done? Now let's come to this question. What is the amount paid to creditors? What is the amount paid to creditors? How do you find a creditor's account? If you logically look into it, what all have they given in the question? You know the opening balance of creditors. Who's a creditor? The person from whom I have purchased goods on credit. Now look into this. What does this creditor reflect 4 lakh in the trial balance? Be loud, no. Why are you? This is my closing balance of creditors. Now see here. Opening balance of creditors is 3 lakhs. Correct. What is the purchases I did? What is the purchases I did? 13 lakh. Minus my closing balance. Minus my closing balance. How much? So my that will be the amount paid to the creditors, which is what? Are you clear? There are two ways of presenting this. One format is you can do the ledger account. You can do what? Ledger account, or you can do the statement format, whichever is comfortable. Right? Copy this down. Are we assuming the purchases are done in the credit? The answer is yes. And also, Shiva, when you logically look into it, even if it's a cash purchase, right? The creditor is a person from whom I'm purchasing goods, right? It's a supplier. So, still that logic holds good, even if I assume it's a cash purchase. Guys, are you clear with this? Done? I am now getting scared what you will see and write. Okay. How did you manage? How did I not get to know till today? Adu okay pa. Yo. Everyone understood the adjusted purchase logic? Right? So again I'm saying check whether the closing stock is appearing or not. This question will make your paper easy to difficult. Just this entry of closing stock, because closing stock, the moment, imagine you take it in the trial balance, you consider it part of purchase. Both purchase is wrong, closing stock is wrong, trial balance is wrong, trading is wrong, balance sheet will be wrong. So literally you screwed up because of one entry. Come to the next question. Come to the next question. Look into this. They have given you particulars, purchases, carriage inwards, wages, sales. From the above information, prepare your trading account. Now, just I wanted to teach two things here. What all they have asked me. From the above information, prepare a trading account. ABC traders for the year ended 31st March and pass the necessary closing entries in the journal proper. Journal proper. Subsidiary book. What is journal proper? I told you transactions which cannot appear in the remaining cell. I told you journal proper is same as journal entries only. Correct? Now, I am not going to be doing this question. Right? We'll just run through the solution. Where will opening stock come? Debit side. Purchases. Debit side. Now, what do you mean by return inwards and return outwards? Return inwards is sales return, purchase return. Right? So, I told you guys, I am always more concerned about finding out the net purchases. I'm more concerned about finding out what? Therefore, see here, my 6,72,000, I will try to find, are there any return outwards? Are there any return outwards? So, I will reduce my return outwards here. So, my net purchases is what? 1 done. What do you mean by carriage inwards? So, remember in the examination also, if you guys are, carriage inwards will come in trading, carriage outwards will come in P&L. Because carriage outwards is related to my sales. Carriage outwards is related to my, that is sales and distribution expenses. Selling and distribution expenses. So remember this, carriage inwards will appear in my trading. This I want you to write down. Carriage inwards will appear in my trading. Carriage inwards will appear in my trading. And carriage outwards. And carriage outwards. Carriage outwards will appear in my profit and loss account. Are you clear? So, carriage inwards is my direct expense. Wages, sales return. So, you'll write your sales and sales return. Sales minus sales return on this side. Your carriage inwards and expenses. Finally, the balancing figure will be your. This is not a trial balance, so therefore I can write my closing stock. Now, what is the second thing that they've asked me to do? Pass a journal entry. Pass what? At the beginning of this class, what did I tell you guys? My trading and P&L account is like a ledger. It's like a... Now, if it's a ledger account, how do you read this journal entry? Trading account to opening stock, trading account to purchases, trading account to carriage inwards, trading account to wages. This one, sales. To trading account, you can write the net figure. Then, that's all. Concept saves our time. So, trading account, if they ask you to make a journal entry, it is very simple. We are going to read it like a ledger. Is everyone clear with this? Now, sometimes if you guys want, you can, I'll tell you one more thing, look into this. What is this doing? Purchase. And what is the effect of a purchase return? It is reducing the value of the purchases. Purchases, what is the journal entry for purchase? Purchase to cash. Purchases have a debit balance. How do you reduce a debit balance? So this entry is written as purchase returns to Are you clear? Tell me what will be for sales then. Sales is a credit balance. You are reducing the sales value by 1 lakh. You are reducing the sales value by 1 lakh. Therefore, it will be sales to sales return 1 lakh, 1 lakh. Are you all clear? Are you guys clear? Sendil, Bani, Preeti, Shiva, Imanchi, are you guys clear with this? Sai Charan, are you clear with it? Any doubt? Everyone understood the journal entry bit? Now, let's come to the profit and loss account. What did I do in my trading account? Look into it. I took my direct income, opening stock, purchase plus direct expense, closing stock. This gave me my. This is basically my balancing figure, like a ledger. Now, this closing balance becomes my opening balance of profit and loss account. This closing balance will become what? So, you will write it as by gross profit. Like the way you remember in the ledger account, what did we say? If the balance is appearing on the debit side, it is called as credit balance. Correct? No? This is what? Debit. This is what? So this is my closing my balancing figure. Gross profit is appearing in the debit side. That means this is my credit. So my profit and loss account starts off with gross profit. For this, I will add the indirect income. Indirect income is other income than what mainly my business is meant for. Clear? Less, that is indirect expense. This will give me my net profit. This is the skeleton of P&L. Now comes the drama. What are the drama? It can happen. Rule number 1 was I want the presentation to become better. I want the presentation to become what I will do. Indirect expenses, I'll try to segregate into multiple things. Administration expense. What do you mean by administration expense? All the expenses which are related to my Okay, all the expenses which are related to my office, right, where the management, everything gets involved, that becomes part of my administration. Selling and distribution, all my sales and marketing related. Then my financial expenses. So what I will try to do, all these indirect expenses, I'll try to club under different categories. Sir, can I get all the categories right? As a foundation student, I'll not bother. I will only bother about classifying between direct and indirect. I will not try to bother about your administration, or your sales. Nothing I'll bother. Indirect, no, put it around. As we go along in intermediate and final, we'll try to classify it because it gives a better presentation. Sir, I can't present that way. Okay, your job. Nothing that it is gonna change the world or other part of it. Clear? Second rule that you have to understand in my P&L, expenses which are only got to do with the current year will come in. Expenses which are related to what? Now, sir, trading account and this, how is it different? Look into it. Trading account will show expenses which are related to the sale made. If you remember my matching concept theory, what did I say? All the income earned in a year has to be matched with the expenses to earn that revenue. Trading account. And all the expenses incurred in that period. P&L account. That time, I don't know how much sense it made. Now, if you remember it, it's actually talking of trading and P&L. Trading account says all my expenses to incur that revenue. Second one, it is saying all the expenses incurred for a particular period. That is my indirect expenses. Did you all understand this? So much depth theory. Varma Lakshmi time is there. Don't make Kali avatar and all. Sitting in front. Clear? There. So, I have to make sure that all my expenses for a particular period are taken. That means if there is an expense which does not belong to that period, remove it off. If there is an expense which is not paid, consider it. But that period expense has to appear in my P&L account. Are you clear with this? This is the adjustment that you have to get. Third one is my indirect income and indirect expenses, which are not related. Let's say, for an example, I sold an asset, made a profit. I sold an asset, made a profit. Where should it come? Is your job to buy and sell assets? No, right? Assets are meant for long-term business. Therefore, where it will come? Profit and loss account. Profit made on sale of an asset. You made a money. Was that your business income? No. It was an indirect income. I put my money in the savings account. Bank felt happy and gave me some interest. Is that your main income? So it will be part of my indirect income. So you need to identify this classification. Are you all clear? Devipriya, Sai, Bani, are you guys clear with this? So if I can understand this classification, I'm done with my P&L. Clear? Now, this is for your understanding. Like I said, not compulsory. If you get confused in the examination, don't try to do this mistake of your foundation. So, you know, as students, we try to showcase to the examiner, right? I know this properly. Don't do that mistake in CA. If you are getting confused, you don't know whether should you put under selling, distribution. Don't do this classification at all. You will get marks. You do the classification and do it wrong, you will lose marks. Understood? You are doing classification. You know properly, you want to show the examiner. Sir, she did not do classification. Arvind did classification. How much marks both will get? Same. So don't show, this way I said, don't show you're too intelligent also. Being a normal guy makes your exam easier. Done? So let's try to understand this expenses. What are the different kinds of indirect expense? Administration, salaries, admin. What what about a salary of somebody who's working in production department? There's a guy who's working for, let's assume, ArivuPro. My salary, oh, I can't take my example. Okay, let's assume another faculty's salary. Is it part of direct expense or indirect expense? Teacher's salary. Teacher's salary. Ashok's salary. Indirect. Ashok and all are part of administration. Right? Teachers are all part of the direct expense. So we are called as wages. They are called as salaries for the purpose of accounting. Right? Now, let's look into the rent. Rent of the factory, rent of the corporate office. Where will the rent of the factory come? It's going to be part of my direct expense. Whereas office rent is part of administration. Printing and stationery, administration. Telephone charges, audit. A lot of us in our real life keep wondering, audit expenses, right? Accountant, audit and other part of, what do you think, direct or indirect? We are indirect. Why people prefer to go to Big Four? In Big Fours, you are a direct expense to the company because their job is to give accounting service. Whereas a company which is doing software, you go and say, oh, I'm the king. They'll throw you out because you're not part of direct. You are part of indirect. Are you clear? Nature of business. Look into it. Now, next one. Your repairs, maintenance, depreciation. Again, look into it. Depreciation of machinery. I know expense only. Direct or indirect. Depreciation on machinery is a direct. Depreciation on furniture, office equipment and other part of it is indirect. Sir, when are we going to learn all of this? CA Inter costing. If I am only teaching, I'll teach you guys. Today, not required. Depreciation, today we'll take it as part of it. But sometimes if they give you depreciation on machinery used for production, please remember it has to be part of my direct expense. Selling and distribution expense. What all can be part of your selling and distribution? Your sales commission, your advertisement. What is the difference between go down and warehouse? Madam, she owns. Which material? Raw material or finished goods? Okay. Go down is the place where you store the finished goods. You want to see go down? Ask madam. She'll take you to her factory. You also don't go. What is this? So, the place where you store your finished goods is your go down. The place where you store your raw materials is your warehouse. Right? Warehouse rent is part of your direct expense. Whereas go down is part of your selling and distribution. Because one of the thing that you need to remember is any cost that you are incurring after the goods are completely produced are all going to be indirect expenses. So go down is part of your indirect. Selling commission, bad debts. Then financial expenses, you have bank charges, interest and discount. Abnormal losses, you have loss on fire, loss on factory, something and all. Then come to the other income, discount received, commission received, bank interest, rent, dividend income, profit on sale of investments. Finally, it gets your net profit. Clear? Now, how do you do this as a journal entry? If they ask you to do journal entry, how would you do it? This is again form of a ledger. How do you read it as a ledger? P&L to salaries to rent to printing to blah blah blah. Then on the income side it will be discount received to P&L, commission received to all of those. Are you fine? Right? Till now, in the last 20 years, they have not asked this question. We don't know. So, just that time, don't remember my parents and all. I'm telling you again and again. In the examination, God will not even forgive you. I have taught it. I have told it as ledger and other part of it. So, make sure you remember and follow it. Clear? Now, let's come to certain things. Drawings. What is a drawing? Drawing is something where the proprietor has used it for his personal use. Now, I will start writing it from now on. I want you guys to understand as we go along. Right? Let's assume one by one. So, please start writing. Goods withdrawn by proprietor. Goods withdrawn by proprietor. I think we have covered this journal entry already. What is the journal entry? Super. Drawings, account, debit, to. Superb. Nice. This we know, entry. I want you guys to go to one imaginary world. I want you guys to understand whatever I've taught you till now. What did I say? Your purchases. This drawing is given as an adjustment. That means it has to appear twice. One debit, one credit. In your total purchases, I am doing this as what? Purchases has what balance? Debit balance. I am writing this on which side? Credit side. That means in my trading account, under purchases, I will write less drawings by proprietor, this amount. By doing this, what I have done? I have done the credit. Second part of it, what I will do, I'll go to the balance sheet. Capital. Let's assume capital was 1 lakh. Now, what will our drawings do? Drawings reduce a capital. Drawings does what? Reduces a capital. So, I'll reduce 10,000 here. Capital has what balance? I am reducing the capital. Therefore, it is debited. Have I done one debit and one credit? So every time when you do an adjustment, this is how you need to keep looking into it. Not bothered about the journal entries. Even if you don't get journal entries, even if you do like this, one debit, one credit, closing your eyes, your balance sheet will tally. You can come out of the examination assuming that you have done it right. Whether you will get full marks or not, it's a different story. But you will get a sadistic pleasure that you have got your balance sheet right just by following this thumb rule. This understood everything? I want you to write the effects from now on like this. So that on the day of examination, when you see an entry, you should know where it is getting affected. Write this down. Did you understand Amulya, Aishwarya? So let's assume purchase was 50,000. From the purchase value, you will reduce 10,000 in your trading account. And then in your balance sheet, you will be reducing 10,000 from your capital. Guys, are you clear? Devi, Sai, Sendil, are you guys clear with this? Now, let's assume instead of this, let's come to the second adjustment. 50,000 cash withdrawn by proprietor. 50,000 cash withdrawn by proprietor. When a cash is getting withdrawn, what will happen? Now, let's use the logic. Cash is getting withdrawn. Is the cash balance increasing or decreasing? Cash is an asset. Asset is decreasing. Therefore, cash should get credited. Cash withdrawn by proprietor for personal use. Drawings. What is drawings? Is a debit. So, what will be your journal entry? Drawings. Let's assume 5,000. 5,000. Now let's try to understand how does it affect my balance sheet. Cash will appear where? In the assets. Let's assume cash balance was 5 lakh. You will reduce by 5,000. You will reduce by what? So what will become my new cash balance? Now let's assume capital was 5 lakh. Here you will again reduce drawings 5,000. Therefore it will become 4 lakh 95,000. Are you clear? Did you guys understand this? Yeah, copy this down. Cash withdrawn by proprietor. Cash withdrawn by proprietor. Are you clear? Devi, Sendil, Preeti, are you guys clear with this? Done. Entry number 3. Entry number 3, let's try to look into it. Rent paid 50,000. It is appearing in your profit and loss account. Now they are telling rent paid includes 20,000 for proprietor's house. Out of the rent paid of 50,000, 20,000 is paying what? His house rent. Should you include this? Why? Because now I want you to look into it, how it will affect. I have a P&L account and I have a balance sheet. I have a P&L account and I have a bank. Now, before this adjustment, how much will rent show in my P&L? 50,000. And let's assume my capital is 5 lakh rupees. Now, what are you going to be doing this? I want you to don't forget your journal entries. Just try to logically tell me what will you do? Boss, my rent is 50, but actually business rent is what? 30. That means I have to reduce 20 from there. Rent is what? Rent is what? Expenses should be debited. So if you're reducing a rent, what will happen? To rent account 20,000. Are you clear? Why did you reduce it? That was personal, and personal expenses are called as drawings. Will have what balance? Done. Now see, rent account I will reduce, drawings 20k, therefore it will become then less drawings 20k, so this will become 4.8. Are you able to understand how am I constructing the entry? Entry and the effect. Entry and the effect, right? So, can I know your name, infant? Costing marathon will be on 3rd, 4th. Guys, are you clear with this? Everyone understood the way drawings are done. So drawings, majorly it will be one of these 3 combinations only. So the moment the adjustment comes in the drawing, look into these 3 things, how it is happening. Write on the second category, discounts. Second category, discount. Under discount, the first one, trade discount. First one is trade discount. Okay, what's the journal entry for trade discount? Pinch. What did I say? Tell correct only. Why are you doing this? Huh? Trade discount. Thank you, madam. Trade discount will not be recorded. Trade discount will not be recorded. He is fine. Trade discount will not be recorded in the books of accounts. That means let's assume like this. Purchase price of the goods is 5 lakh. Purchase price of the goods is what? 5 lakh. They are saying trade discount is 10%. Trade discount is what percentage? 10%. Therefore, how much did you pay for purchase? 10% of 5 lakh 10%, 10% of 5 lakh is 50,000. So that will be 4 lakh 50,000. 10% of 5 lakh is what? 50,000. So therefore, the purchase price is what? 4 lakh 50. So when trade discount is given, you will write the entry as purchase account debit to X 4 lakh 50 only. So you will not write discount separately whenever it's a trade discount. Are you all clear with this? Second one, write down cash discount. Did you guys write trade discount will not be recorded? Guys, are you clear with this? Second one, cash discount. What is cash discount? Income. Income should be debited or credited. So what will be a journal entry? What will be your journal entry? Okay. I want you guys to understand this part of it where a lot of us see here in my profit and loss account. Cash discount, is it an income? So can I write it as discount received? What is the journal entry here? No, read this entry. Discount received. Correct? Now, the first question that you might be asking me is, sir, income should be credited, no? Should be credited, no? Now, that is where let's try to understand. I purchase goods from Veda. What's the journal entry? Purchase to how much, ma? 1 lakh. I paid her 90,000. I paid her 90,000. What's the journal entry? Veda 1 lakh. Correct, no? To cash 90,000. To discount received 10,000. Done? Now let me open discount received ledger. How do you write in discount received ledger? By Veda 10th. If you remember when I did my ledger account, I told you guys one thing, that nominal account ledgers will not be balanced. They will be closed by transferring it to. Now if I transfer it to P&L 10,000, this is my balancing figure. Now read this journal entry. Discount received to P&L. Isn't it the same entry it is showing? So when they are telling this, they are meaning in the P&L account, because remember we have already passed the stage of journal entries. I am doing accounting for what? My trial balance. So when I said discount received to P&L, I am meaning that it's already appearing in the trial balance. But I would want you guys to write this, because a lot of students I've seen getting confused. Yo, discount received was always credited. Why did they debit? This is the reason. Did you guys understand this? Guys, did you understand this? Chandana, Sendil, Devi. Done. Write down the next one, rebate. What do you mean by rebate? Huh? Hey, no bill. Okay. Now, what happens is, let's assume I go to Veda, keep telling her, ma'am, give me discount. I'll be your regular customer. I'll buy goods from your shop only or your factory only. I keep telling her again and again. She again doesn't trust me. She's like, Arjun, you purchase. We'll see at the end of the year. You purchase with me. We'll see what. Now, end of the year, what she will do, from the money that I need to pay her, she'll give me some discount. She'll give me what? Some discount. That discount becomes rebate. Or sometimes she'll give me back the money like a cashback offer. That's a rebate. Rebates are usually done towards the end of the period. But for me, from an accounting angle, it's very easy. It is either I'm giving a reduction in the amount which is payable by my customer. It is what? A reduction from what? From the total purchases that I would have made. So I'm giving some discount to the customer. Is a rebate for you an income or an expense? Let's assume I am giving rebate for you guys. Is it an income or expense for me? Expense. Now look into this. I have sold goods to Veda. What's the journal entry? Veda 1 lakh. I had told her, ma'am, if you purchase from me up to 1 lakh, I'll give you 10% discount end of the year. I'm giving you what? Or rebate end of the year. Now, so how much is Veda gonna get a discount here? 10,000. So that means, can I say Veda has to pay me only 90k more? So this becomes a journal entry for rebate. So rebate is my expenses. Did you understand? So rebate to customer account is the journal entry. Understood this entire scenario? Copy this down. So today we'll only do what do you say? All the adjustments. Tomorrow we'll do the full-fledged questions of everything. Go ahead. I'm saying take a break and come. Oh, it's already 11. Guys, are you clear till now? So we'll take a quick 10-minute break. It's 11 o'clock now. 11:10, we'll reassemble. ತಿನ್ನೋದಾ? eat. Online folks, will see you guys at 11:10, the YouTube folks.
Joe, will you come? You will not know. I know, I guess also will provide you with the sheets. If you're going alone, then come. ಇಲ್ಲ ಇಲ್ಲೇ ಇರೋದು ಇನ್ನು ಕೆಳಗಡೆ ಇರೋದು. ಹೌದಾ? ಹಂಗೋದ್ರೆ ನಮ್ ಬೇಕ್ರಿ, ಹಿಂಗೋದ್ರೆ ನಮ್ ಜ್ಯೂಸ್. ನಾವು ಕಾಮನ್ ಆಗ್ಬಿಟ್ಟಿದೆ. ಮಳೆನೂ ಕೂಡ ಒಂದು ಪರ ಇತ್ತು ಗೊತ್ತಾಗುತ್ತೆ ಪಾಪ ಅದು ವಾಪಸ್ ನೆನ್ನೆ ತೊಗೊಂಡೋದಾಗುತ್ತೆ ಅಂತ ಸ್ವಲ್ಪ ಚಂದ ಅನಿಸ್ತದೆ ಆ ವೀಕೆಲ್ಲ ಪೂರ್ತಿ ಮಳೆ ಇತ್ತು ಮಾತ್ರ ಚೆನ್ನಾಗಿ ಮತ್ತೆ ಬೇರೆ ಮನೆ ಬಿಡ್ತಾರೆ ಅವರು ಬಂದು ಬೇರೆ ಮನೆ ಬಿಡ್ತಾರೆ ಅವರು ಬಂದು ಗೊತ್ತಿಲ್ಲ ಡ್ಯಾಡಿ ಏನಂತ
2, 3 ಸ್ವಲ್ಪ
ಯಾರು ಚೆನ್ನಾಗಿರುತ್ತೆ
ಅರವಿಂದ್ ಮತ್ತೆ ಯಾರಿದ್ದಾರೆ
ನಾನು ಬರ್ತೇನೆ ಬಂದೆ ಮಾಡ್ಬೋದು ನಾನು ಕಂಫರ್ಟಬಲ್ ಮಾಡಿ ಅವ್ರ ಹೆಸರು ಬರ ಬರ್ತೇನೆ ಅದು ಪೂಜೆ ಮಮ್ಮಿ ಅಲ್ಲ ಮಮ್ಮಿ ಹೇಳಿ ಹಬ್ಬ ರೆಗ್ಯುಲರ್ ಬರುತ್ತೆ ಅದು ಹಬ್ಬಕ್ಕೆ ಸಂಬಂಧಪಟ್ಟಿದ್ದು ಲಕ್ಷ್ಮೀ ದೇವಿಗೆ ಸಂಬಂಧಪಟ್ಟಿದ್ದು ನಾವು ಮಾಡ್ತಿರೋದು ಒಂದು ದಿನದ ಹಬ್ಬಕ್ಕಲ್ಲ ವರ್ಷ ಇಡೀ ಪೂರ್ತಿ ಜೀವನ ಮಮ್ಮಿ ಅದನ್ನ ಮಾತಾಡಿದ್ರೆ ಡ್ಯಾಡಿ ಹೋಗ್ಕೊಂಡು
Okay, shall we start? Finished. How many are there? Okay. Tomorrow the class will be at 8:30. Wednesday onwards it will be 7:30 onwards. I told 8:30 only, not today. Oh, friend. They are called friends. I didn't know you both ate each other sitting next to each other also. I asked her why you didn't come. She said like this. I didn't. I asked her in the class. You sing that song, Dost Naraha. Done? Shall we start? So we were discussing about what? Okay, now I'll come to the most confusing or difficult part of it. Treatment of bad debts. Treatment of what? Now, I want you to write along with me when we started. If provision is not maintained and if first one, if provision is not maintained, the second one is provision is maintained, provision for doubtful debts. Okay. When will a debtors turn into bad debt? I think we have done a lot of entries, right? When will a debtor turn into a bad debt? Thank you. Not debtor and all, no, debtor. Debtor is insolvent, right? So you sold goods to Arjun. What's the journal entry? Thank you. Arjun to sales 10,000. 10,000. Arjun became insolvent. Court said they will pay you, what is say, 50 paise for a rupee. So what's your journal entry for this? Bank account 5,000. Bad debts 5,000. To Arjun account 10,000. Right? So I'll make it as 100%. Why 50% on? 100% you won't give the money. What will be the journal entry? Bad debts account debited 10,000 to Arjun account 10,000. So in your after this, look into it. In my P&L account, what did I say? Expenses will come where? Bad debts 10,000. Are you clear? Why? Just look into it. Bad debts is having what balance? Debit. This is what account? Nominal account. So I should be transferring it to P&L. So if I transfer it to P&L, what will be the journal entry? P&L account debited to bad debts. Have I not written this? This is when bad debts is provision is not maintained. Did you understand this? Copy this down. Chandana, Sandil, are you guys clear with this? Guys, are you done? Now let's come to this. This is most of them. Is this easy? So you won't get in the exam. So let's come to things which is easy again, but you won't understand. Right? What do you mean by provision? I've done now. Don't look at that blank face. I've thought, what is provision? Liability, correct. Then, when you know there is a liability but you are not able to find it, the exact amount, then you try to create a provision. Provision is done because of conservatism principle, right? What does conservatism principle say? Future losses you need to record it. Now, see here. Please, I can only teach once and this will come till your final. So please put all your focus and try to understand it. I'll try to make it as simple as possible. And since I'm giving full effort, I'll only teach once. You can watch the video again and again. Right? I have a debtors balance of 1 lakh. I have a debtors balance of what? 1 lakh. Now, I know seeing the past trend, if I have 1 lakh rupees, usually 5% of people don't pay me the money. Usually what they don't pay me the money? So what I do, I maintain a provision because this has been my past trend that I maintain provision of 5%, which is coming up to 5,000 rupees. So my debtors will be 95,000. So how do I show it in my balance sheet? Is here, let's assume this was on 31st March 2022. On 31st March 2020. In my balance sheet, what I will write is balance sheet as on 31/3/2022. I'll write debtors 1 lakh less provision 95,000. Are you clear? Now on 31/3/2024, sorry, 2023, 31/3/2023, company has a method to maintain a provision of 5%. Company has a method of maintaining provision of what? This year, my debtors was 2 lakh. This year, my debtors was what? How much should the provision be? How much should the provision be? Super. 10,000. How did you get 10,000, Amulya? 5% of 2 lakh, 10,000 rupees. Your calculator, my calculator, everything showed the same value, 10,000 rupees, right? Now, what you need to understand is, what is the provision created during this year? What is the provision created during this year? $5,000. Last year, how much you had in provision? So, provision is like your reserves. You have already kept a reserve of 5. How much additional reserve you wanted? 5. So that my provision becomes 10,000. So my provision created during this year will be. Did you all understand this? Provision, again and again I'm saying, it's you're keeping aside some money from the profit. You want a provision to maintain how much? 5% of the debtors balance. Last year you had already created a reserve of 5. So this year I want the total provision to be 10. Therefore, how much additional provision I will create? 5. Done? Write this down. Yeah, give it to. For you only. Eat so much. ಟಿಶ್ಯೂ ಕೊಟ್ಬಿಡು, ಮತ್ತೆ ಅದೇ ಪೇಪರಲ್ಲಿ ಬರೀತಾರೆ, ಹಂಗೆ ಇದು ಮಾಡ್ತಾರೆ. See, before you guys visualize only will tell. Give it, they'll take it as. Huh? Nothing special. I made you guys wait for the lunch break. That's the breakfast break. I was talking something little urgent. That's the reason. Did you all understand this? So as you write, you can keep eating. So the first objective is to write. Along with it, you can eat. Are you clear, online folks? Chandana, Sandil? Give her more dice. She didn't have her breakfast. Yeah. You help her. At least you didn't communicate what she said. You at least help her. Yeah. Wait. I'll tell you when. So first copy this down. Devi Priya, Ammu, are you guys clear? Guys, done? Done? Everyone? Okay, now let's try to understand how will a bad debt get affected? How will a bad debt get affected? Now, see, when I've already created a provision for bad debt, when I've already created a provision for bad debt, what will happen is whenever there is a bad debt happening, you will not try to write off against profit and loss account. You will not try to write off against, rather, you will write off against a provision. Let me give you another example. Now, for better understanding, I have a debtors, same 2022, debtors 1 lakh, provision 5,000. Okay. 2023, they have told debtors is 2 lakh 10,000. Debtors is what? 2 lakh 10. Now, I want you to write down these two adjustments. Adjustment number one, bad debts is 10,000. Second one, it is the policy to maintain provision at 5% of debtors value. Two things. What is the question? I have an opening value of debtors of what? 1 lakh. Provision maintained was what? 5,000. This year my closing value of debtors is what? 2 lakh 10,000. You have a bad debts of what? 10,000. And the company or the business is having a method of maintaining provision of what percentage? 5 percentage. These are the information given it to you guys. Right? Now, done writing. They all have had breakfast. You can continue to eat. If you faint, then your parents will come all the way. Why all those? You have eaten, no? Today is telling truth. Done writing? Okay, let's write one by one. What is the journal entry for bad debt? Bad debts to debtors account. Write down the journal entry one. Bad debts to debtors. How much? 10,000. 10,000. Okay, when you pass this entry, now what happened to your debtors value? What happened to your debtors value? It reduced by what? 10,000 rupees. So that means, can I say the new debtors value will be minus 10, 2 lakh? Correct? Now, let me teach. I want you to compare the previous entry that we did. First entry, when I did not maintain provision, what was the journal entry? Bad debts to debtors, correct? Here also I wrote as what? Whether I maintain provision or not, I wrote it as bad debts to debtors. What was the second entry I wrote here? P&L to bad debt. When I maintain a provision, I will not transfer to bad debts, rather I'll transfer provision for bad debts to debtors. Sorry. So whenever provisions are maintained, I will not transfer it to P&L account. Rather, I will transfer it to what? Provision accounts. Are you clear? So write this entry. Next one. Huh?
Rectification of errors. This was same.
That's okay. We'll cover all the things. When we guys do practice question, you'll be like, I know everything. That's the objective. You both are studying together? No. Guys, done writing the entry. So what will be the amount now? Provision for doubtful debts. How much is the amount? 10,000. 10,000. Okay. Should I teach logic first or accounts first? Okay. So, which you don't understand, we'll teach you first. Okay. What was your opening provision? 5,000. You have maintained provision for the purpose of bad debts, correct? You had an opening provision of 5,000. Now, you are suffering a loss of how much? Do you have enough provision? Who now? How?
In 2022, we had opening provision of 5,000. In 2022, we added constant.
Who told you? Read the question carefully, no? I wrote the company policy is to maintain a provision. In the last question, I had already provisions available, so I did not have to break my head. Because I did not have a bad debt. This time I'm having a bad debt. Now, see here, you have 5,000 rupees kept as reserve, thinking that your loss will be 10,000. Sorry, 5,000. But in reality, your loss ended up being what? 10,000. Are you falling 5,000 short? Keep that aside. Keep that 5,000 aside. What are they telling? my provision end of the year should be 5% of the value of the debtors. What is the value of the debtors now? 2 lakh, not 2 lakh 10. The value of the debtors today is what? 2 lakh. In this 2 lakh rupees, if you have to maintain a provision, how much it will be? 10,000. Previously, you had a provision of 5. In that, you have overutilized 5. That means, are you falling short of 5,000? Plus, you need an additional provision of 10,000. So, how much new provision you have to create? 15,000. That is what is important. Students don't understand this concept. It is like what is a give and take, right? Was 5,000 was there. I ended up spending 10. I am falling short of 5. Keep that. End of the year, I need to have a provision of 10,000. Already I have a shortage of 5. So how much will you transfer from the current year profit to the provisions? 15,000. So the journal entry will be, see here, P&L to provision 15,000. Understood? Right? One of another way of doing this is I maintain provision for doubtful debts ledger. Provisions are what balance? Debit or credit? Credit, right? Because it's reducing the value of the asset. So see here, by balance, opening balance, I will write 5,000. By balance carried down or brought down? Brought down 5,000. What is the journal entry for bad debts I wrote? Provision 2. So see here, 2 bad debts. How much was it? 2 balance carried down 2 lakhs into 5%. Why did I say this 2 lakh into 5? It is the policy of the company to maintain. So your closing balance should always be equal to the 5% of the debtors value. Are you guys clear with this? Hello. Morning, Amar. Amar, I have sent you that screenshot. Just look into it, right? I'm in a meeting right now. I'll call you back. Yeah. Call me at 1 o'clock. Buy balance brought down. Now, this you understood? Now, look into it. Now, the balancing figure is what gets transferred from P&L, 15,000. Are you clear with this? This is accounting. If they ask you to maintain. But did you understand the logic how we arrived at it? This you require till your CA final. Foundation के बाद intermediate teachers and all will think you have learnt it in foundation. So your life will become that void throughout if you have not understood this. I hope I have explained it simple. If you have not understood it, rectification and all, not my mistake. Do this. Eating and learning is quite difficult. You are handicapped today, you can eat. Guys, are you clear? Did you understand it? Right? Now, I want you to look into it, how it will reflect in my balance sheet and P&L. In my profit and loss account, I'll be writing only as to provision 15,000. And in my balance sheet, it will be looking as debtors 2 lakhs less provision 10,000 1 lakh 90. Did you understand this too? Madam, my provision value is 5% of the debtors value. If you see what is my closing balance of provision, that is what I'm reducing it here. And this would be equal to 5% of your debtors value. Understood? Sure. Arvind bhai. Tire bhai. He is like, you give test Wednesday, we'll see. Did you all understand Shiva, Aishwarya, Imanshi, Neha, Karthik? Chandana, Sendil, are you guys clear with this? Superb. Okay. I would want you guys just to look into this example what I'm talking right now. Take out your calculators. We'll read. On 1st April 2021, a provision for doubtful debts existed at, what is this? I have a opening provision, or can I call it as last year's provision? Trade receivables was 15 lakh. Receivables was what? Bad debts was 1 lakh. It is required to write off bad debts. What's the journal entry for writing off bad debts? So that means now my new debtors value will be, can I say 15 minus 1, 14 lakhs? Yes or no? Second part of it. And create a provision of 5% of the trade receivables. 5% of the, how much is 5% of 14 lakhs? 70,000. Correct? Now, your opening provision was how much money? 40. In that, how much did your bad debts turn out to be? 1 lakh. Therefore, you are having already a shortage of 60. Plus, additionally, you require end of the year how much? 70,000. So, what will be the provision created during the year? 1 lakh 30,000. Understood the question and the solution? Let me ask you another question. What if my bad debts was only 20,000? Tell me the answer. What if my bad debts was only 20,000?
50,000 this year.
What if the bad debts was only 20,000? Sir, huh? Why you guys give such blank faces? Ta-na, na, 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 na. 90? 94? I think it is right. What did you do? Wait, pound. You didn't eat also. Thank you. First thing, 15 lakh minus 20,000. 14 lakh 80 into 5% is what? 74,000.
40 minus 20.
Wrong. So your 54 is the answer. Wait. You have a opening provision of what? 40. In that bad debts was what? You remove 20. How much is left over? 20. End of the year, you want a provision of what? 74. You already have 20. Therefore, how much more you will create? 54. Why did I add in the previous one? Look into it. I had in this question only 40. I had only, how much was my bad debts amount? 1 lakh in this question. 40, my bad debts amount is 1 lakh. I have a shortage of 60. Next year, I want to maintain a provision of 70. I have a shortage of 60. I want to create a new provision of 70. Therefore, my total money required will become 1.3. Understood? समझ में आया सभी को? Fine. Right? Copy this down first. Everyone understood? Pakka clear with provisions? Shall we do the next topic? Okay. Next one is provision for discount on debtors. Provision for discount on debtors. Now, how do you create a provision for discount on debtors? How do you create a provision for discount on debtors? Look into it. Now, how did I write my debtors value? 2 lakh 10,000. In that, I reduced 10,000 debtors. 2 lakhs was my debtors value. In that, I reduced a provision of 5%. Therefore, 1,90,000 was my value of debtors, right? Provision for discount is created after this. That is, for the guys who are going to be paying regularly, you want to give them some discount, that is created. So this will be, let's assume, less 1%. That is 1,900 rupees. So you'll be creating a provision after giving a provision for doubtful debts. I've given it in the notes, look into it. Provision for discount is calculated only on the good debtors, that is after deducting the provision for doubtful debts from the total trade receivables. Are you clear? So if they ask you guys to it, make sure bad debts are reduced, then provision for doubtful debts are reduced, then finally you will be reducing the provision for discount. What will be the journal entry? Provision, right? It's an expense for you. So you're going to be creating from P&L. So it will be P&L to provision. It will be from what? P&L to provision. Everyone understood the bad debts? What is the journal entry for bad debts recovered? Bank account debited to bad debts recovered account. Then you will transfer it to bad debts recovered to P&L account. We have already covered it in the journal chapter. Bad debts recovered is an income. Income will be credited. Cash account debit to bad debts recovered account. Are you clear? Okay. Now, let's try to look into this concept of rent. So write down next one, outstanding expenses. Next adjustments. Before you come tomorrow's class, you need to be extremely thorough with everything what I've done today. Because tomorrow we'll only be doing questions. I'm not going to sit and waste my time again on concepts and other part of it. That's why I'm going very slow with each of the adjustment. Be thorough, then the application becomes very, very easy. This chapter is again a 10 marks chapter, right? This and NPO and incomplete records. By this, we should be done with scoring 50-60 marks of my accounting paper. All of the chapters and all will solve later as we get. Rent. Now, let me take the example of first one. I have paid 18 months rent. I have paid what? 18 months rent is what? 1,80,000. Now, my P&L account and my balance sheet, let's try to look into it. I would have recorded rent as what? 1,80,000. But what does the concept of matching say? Rent should only be for that particular period, which is what? 12 months into 10, 1,20,000. Whereas this is showing what? 1,08,000. So I need to remove what? So I will less prepaid because I'm reducing it from the rent. This, because I can use the benefit in the future, it will go on the asset side. Prepaid 60,000. Are you clear? Now, let me try to understand the journal entry flow, how it goes, right? When you paid rent first time, what will be the journal entry? Rent account debit 1.8 lakh to cash account 1.8 lakh. Yes or no? Now, in this rent, I got to know 60,000 does not belong to this year. Rent is what? Debited. How do you reduce it from the rent? Outstanding, sorry, prepaid rent account debit to rent account. This is the journal entry. Understood the entire thing? Copy this down. Done? Okay, let's come to the next one. Let's come to the next rent. My rent, let's assume paid is 90,000. I have paid only 9 months rent of 90,000. But how much is my accounting period? 12 months, right? Now, again, look into it. P&L account and balance sheet. P&L account and balance sheet. What does rent show in your P&L account now? 90,000. Rent is showing what? Now, what is that I'm supposed to consider? My rent should be what? 1 lakh 20. Whereas it is showing what? Therefore, I need to add 30,000. Therefore, when I'm adding it, that means this is a debit, right? Therefore, I have to credit it. That will come in my liability, outstanding rent, 30,000. Clear with this? So, what will be a journal entry then? Who's getting added? Who's getting added? You are adding it to the rent account debit 30,000. Are you guys able to understand how the effect and the flow is happening? I'm actually trying a different method for explaining the entire thing. If you guys are getting too confused with it, like I said on my YouTube, there is another way where we do just like a proper debit credit rule. You can use it. I thought let me teach you the impact also if it makes sense. So whichever is comfortable, you can do it. There's even a simpler way on the other video. Just check Arjun Varadraj. You should be able to get it. Guys, are you clear? Done writing? Done? Any doubt with prepaid and other part of it? So if you guys remember during your college days or other part of it, you are always doing this. If you remember in your expenses, this is a mechanical way. Rent account, let's assume 10,000. You are adding outstanding of the current year minus prepaid of the next year. Then you are adding prepaid of the previous year minus outstanding of the last year. Do you remember this doing sometime? If not, I'll explain it to you. Logically understand so that it becomes easier. What is the objective of P&L account? To show the expenses only for the current year, correct? Now let's assume my rent paid is showing. Rent paid is showing. This is the last topic that I'll be doing it today. So just listen to it. I have a rent paid of 10,000. I have last year, this year I have paid a rent of 10,000. I have paid, that means I have paid to the landlord 10,000. Last year, you would have not paid 2,000 to the owner. Last year, you did not pay how much to the owner? 2,000. That means now out of the 10,000 that you have paid, can I tell that 8,000 is what belongs to the current year and 2,000 was the previous year due? Last year, you had to pay me 2. You did not pay it. This year I paid 10,000 to the owner. What will the owner first do? Don't you think he will first adjust towards the last year due? And can I say what you have paid to the current year is 8,000? Therefore, outstanding of the last year, look into it, outstanding of the, I will reduce it from the rent paid account. Does it make sense? Next, whatever rent of the current year you did not pay, he is saying, okay Arjun, you paid 8,000, you still have 4 more thousand to pay. You still have what? So what is the rent for the year then? 10,000 minus 2 plus 4. Yes or no? Whatever is outstanding in the current year will get added to your rent. Don't try to learn it through formula and all. Rather, just understand this logic. Because last year's was that you paid this year. So from the current year payment, you will reduce it. Sir, you have also the due of the this year. You will be paying it in the future. Therefore, that will get added. Clear? Now, let's look at the second example. You have 10,000 rupees paid this year. 2,000 advance you paid last year only. 2,000 advance you paid last year only. What is the rent for the current year? How? 12,000, no? This year you have paid a rent of 10. You have paid 10. 2 months rent of 2,000, you paid it already last year for the current year. So what is the rent paid for the current year? 12,000. Now I'm saying 5,000 you are paying which belongs to the next year. In that 10,000 what you paid, 5,000 belongs to the next year. So what is the rent paid for the current year then? 7,000, because that 5,000 belongs to the next year, you will remove it off. So what the logic of that current year transaction is, was from the payments you have done and payments which are outstanding, make an adjustment so that it only reflects the current year transactions. Did you guys understand this? That is why we do this. So outstanding for the current year, this belongs to the current year, but I have not made a payment. Therefore, I will add it. Outstanding of the last year. Last year's thing, I'm paying it. So that has no role in the current year thing. Boss, last year, take it out. You prepaid last year. Why will you prepay last year? Because it belongs to the current year. Prepayment means what? You're paying it in advance. You prepaid last year. Why are you paying it? For the current year. Therefore, what you will do with prepaid? You will add it. You prepaid next year thing now. You will subtract it. Understood? Copy this down. Yes, Mr. Cricket fan. Evening there are law, I think, maths class, and morning I think accounts class will be there for some time. Done? Understood the effect? We have covered also, if you remember, what happens when the goods are lost by a fire? What happens when a goods are lost by fire? Huh. So what will be your journal entry? Super, madam. Loss by fire account debit to, let's assume 10,000. So when goods are lost by fire, I am going to be crediting purchases. Why? Because I told you, whenever the goods available for sale gets used for anything else, I don't care. It will always be reduced from your purchases account. Therefore, it will be lost by fire account debited to purchases account. Are you clear? Is everyone clear with this? Second part of it. Now, I went to insurance company. I went to what? What insurance company did was, they said, boss, out of this 10,000, they said they will reimburse you 5,000. They'll reimburse you what? So what is your actual loss? 5,000. Now, what you will write is bank account debit 5,000, P&L account debit Understood? So 10,000 is not your actual loss. 10,000 is not your actual loss. What is your actual loss? 5,000. Why? Because 5,000 is reimbursed. So in my P&L account, now I want you to understand how this is going to affect. What's the first entry? Loss by fire 2. So in my trading account, from the purchases, I will reduce 10,000. Option number 1. Or you can write it on the credit side, loss by fire 10,000. Clear? Second thing, here you will write buy loss again 5,000. See here, I have given a credit. I have given a credit of 5. Now I have to give a debit of 5. One will come in the P&L account. Then the second one will come in the asset side. Bank balance will go up by 5,000.
So two loss.
Where? Madam, this is the loss to take out from the purchase value. My purchase value is to reduce, no? So that only I am doing it now. But actual loss suffered is this much only. What did I tell? My trading account should only reflect the goods which are sold at the end. Was this sold? Then you have to remove it from there, no? How do you remove it from the purchases? Purchases debit. So you will credit it. Then you will suffer loss. Loss is what? Is it your direct loss and indirect loss? Indirect loss. So that should come in my P&L. So did you understand how a debit and credit worked here? So you can write this. So first thing, write down this one. Goods lost by fire. Ivanshi, Aishwarya, are you guys clear with this? Loss by fire account debit. Loss by fire account debit 10,000. Loss by fire account debit 10,000. Two purchases 10,000. Two purchases 10,000. Second entry. For receiving the insurance money. For receiving the insurance money. For receiving the insurance money, it will be bank account debit. Bank account debit 5,000. Profit and loss account debit 5,000. To loss 10,000. To loss 10,000. Next one. Next one. So write this down. Adjustments in trading account. In trading account, write down loss by fire on the credit side. In trading account, loss by fire on the credit side. And in P&L account, in the P&L account, buy loss by fire 5,000. In the P&L account, sorry. 2. In the profit and loss account, debit side, madam, you're writing wrong. This way. In the profit and loss account, you'll be writing on your debit side. Debit side and bank account 5,000, and in the balance sheet, bank account will increase by 5,000. So tomorrow I have to teach you two things. One is the balance sheet. Second one is sale on goods on approval basis and commission. 3 adjustments. So we'll recap all of this, do these 3 adjustments, and then we'll start solving the full-fledged problems. You have all the time today. If required, I don't want you to mug up the journal entries or other part of it. I am okay even if you can again rewatch the entire video once, twice till tomorrow. This will strengthen not for your examination but for your life. Whatever I've taught you now. So please don't make blank faces and all tomorrow. Read and come. You will enjoy doing accounting. I'm saying you will see that adjustments, how it is affecting, how the balance sheet will tally. Whenever balance sheet tallies, you get that kick, no? That natural kick. I want you guys to know how it's going to be there. Like, hey, this adjustment, no. People will be like, hey, add this, subtract this. You're like, I know what will happen. Come here, I'll show you this. This is where effect. That's going to be amazing to learn. I want you guys to experience it. For that, you have to read and come properly, right? See you guys tomorrow. Tomorrow, the class is at 8:30 only. Wednesday, it is from Wednesday onwards, it is 7:30. So see you guys. Have a great time. If you liked it, see you guys tomorrow. Thank you.